Hey traders, checking into the stock market today. Bulls still keeping their complete control, but we are seeing some rotation going on as some of our laggards played catch up today. And we saw one major sector start to see a little bit of weakness. We'll check in on everything and see what the bears have to do to prove something. Before we get into it, we've got another free ebook. This one's about swing trading versus day trading, determining which one is best for you, all the different factors into making that decision. It's another good one. Check it out, link in the description or the comments of this video. It's free. S&P 500, gap up open. So on the morning, we know when we're gapping up, we keep an eye out for consolidation and some profit taking, but it was very clear that the bulls had tons of space for the result of any morning profit taking to just be an hourly higher low. And we can look at SPY and see pre-market, okay, we're opening higher. Anything above 450 is an hourly higher low. So that helps shape our perspective on the morning to know, okay, I can be looking bearish, but I know not to get overly aggressively bearish because the result of any morning consolidation is very likely to be an hourly higher low. And that's exactly what we got. So with the open, bears controlled the morning, dropped down, and then from there it was just a clear 30-minute equilibrium on both SPY and QQQ and just a tightening range. We know that if we do not lose the 30-minute higher low and see a new low of the day, the bears don't prove a thing. Tightening range, bull break into the end of the day, close up at the high. So again, it's the emotions currently that we are seeing are FOMO, bull euphoria, and bear despair. That's what's going on right now. And so we're looking at the next resistance level. We just cleared a key resistance zone today. This little double top that we rejected from on the initial bounce attempt way back in January. We are now over that level. Anybody that has been short the S&P 500 in the last 2.5 months is underwater. We are currently $17 from an all-time high, and we are currently $52 above our low. So again, we are chugging along with the 2-month bull flag shaping up. QQQ, pretty much the exact same thing. Pull back on the morning, 30-minute equilibrium into a bull break into the end of the day. And a close up at the high. And after hours, we're still flat. I didn't mean to say after hours. But the previous resistance, 369.64 broke. And now the next level, 373.43. We are further from the all-time high than the S&P 500, but certainly strong here as well. Again, if you want to just keep it simple, the stair-step pattern, higher low every single day. There was one day in here that it broke bear by 18 cents. But the simple statement is if we're not going to lose the pattern of a higher low every day, we're not going to see any daily consolidation. So that's what we're looking for from here to tell us, okay, something's different. We broke the low of yesterday. That's different than what we've seen over the last couple of weeks. And we're now going to scout a daily higher low. Keeping in mind, both SPY and QQQ are going to be scouting hourly higher lows for FOMO bulls to be looking for entries on. Just like Amazon gave us an hourly higher low, an hourly oversold, daily higher low bull flag. Just like NVDA did it, just like XLV and XLF did it, NIO even did it. This is an hourly oversold, marking the daily higher low in a bull flag attempt. Bulls are keeping their control. I head into every morning saying, all right, I've got my long positions. I've got my long Tesla, my long Facebook, my long MSOS. I'm scouting a bearish entry. There's been plenty of day trade opportunities for bears over the last couple of days. And just looking at QQQ as the example, this morning we pulled back over 1% very quickly in less than an hour. Yesterday we pulled back over 1% in an hour and 15 minutes. Friday we pulled back 1.5% in 45 minutes. So it allows for opportunity. Two things are happening when that's happening. Number one, agile day traders are making bear gains. And for me, it's positioning bearish, making some profit, protecting my bull positions as they pull back. And then as bulls continue to prove themselves and bears don't follow through, I then exit those positions and leave a little bit of bull profit on the table. But that's essentially what I've done 3 days in a row. Grab a bear position, we drop. My bear position is profitable. My bull positions pull back. The bear positions start to lose value and I start to scale back out again. So I'm just constantly fluctuating my bear exposure. And the one time where it is for real and we do see daily consolidation, I plan on having a solid green day from a bear position. So that is how I'm going to continue playing the current setup. But I am going to be looking to play hourly oversold backburners because I love oversold bounces, and they've been working well. And I've been using them in the crypto space as there's been a lot of bull strength there as well. So looking at SMH. And again, one more thing to go back to, just, someone posted in the chat room that they've never seen this before. But if you want to look at something that is similar, and granted, all the key fundamental words are different, QE and inflation and Fed rates and bonds and yields. But if you ignore all those words, and if you look at 2019, we had absolute bear control and a 30% drop, 20% drop into a V-shaped high of the day, or all-time high. And it's a little bit different for sure. It was more of a V-shape. We did see little brief consolidation there, but it's just an example of that grind up that can seem like it lasts forever. So patiently, one day at a time. So SMH bulls in complete control, gap up open, drop down, but it was just an hourly high or low. So the low of today is now our benchmark for the hourly uptrend tomorrow. Next resistance level after 284.42 is 290.35. Keeping in mind, we will have to confirm a weekly trend change eventually. SPY has already done so. Tesla, second gap up open in a row. All-time high of 1244 is still 13% away or so. Stair-step pattern, high or low every single day over the last 11 days. Nothing's going to change until that pattern breaks. And an aggressive bear that's looking to swing trade is watching for that signal, keeping in mind that Tesla has not seen hourly oversold conditions this entire bounce, and bulls will be looking to buy that next time it happens. Look at Apple, our lead tech bull. Apple's all-time high is less than 2% away. Apple's monthly bull flag is on the verge of confirming. Just let that sink in. What a massive shift we have seen in psychology and sentiment. And there are lessons. This is going to happen again. We are going to see another weak market again, and we're going to see another V-shaped bounce recovery at some point in time. This is probably the fourth one that I can distinctly remember. And so the takeaway is learn from it. I have benefited more so on this current bounce with swing positions than I ever have in my life. And that's because of 2019. I nailed the 2019 bottom to the day. Some really cool hawks. A lot of them, 4. I nailed the bottom to the day, and I just treated it like an oversold bounce, and I was gone a few days later, exiting those positions. Oh, nice win. I nailed the bottom. And then you look back at what took place from there. So I maybe got this move, and I missed this move. I learned my lesson. That's the only reason that I am doing better this time. I improved. Okay, I made a mistake. I'm going to learn from my mistake. And next time, I'm going to be more prepared. So if you're watching this and you're missing it, and you plan to be in markets for any prolonged period of time, it will happen again. I promise. So learn from it. Just leave runners. Sell partial, stick a stop, give the bulls a chance. And vice versa when we are weak. But obviously, in these market conditions, the last decade, the bulls have much more favor than the bears overall. All right, so XLF confirmed the daily bull flag on a gap up open, but saw a lot of profit taking. And we're seeing XLF now become the weaker sector. And it was very clear that growth saw rotation into it today. QQQ and growth were our lead bulls. XLV and XLF were our weaker sectors. So I'm keeping an eye out for XLF weekly lower high. And I may shift my focus. I've just been shorting QQQ by buying SQQQ just because I watch it constantly. It's the most comfortable sector for me. But now that I'm starting to see a little bit of relative weakness, nothing huge, but XLF just starting to show some initial signs here, I'm going to be scouting an XLF bear position to have for daily consolidation or weekly consolidation, ideally. So again, it's just looking at the little higher lows that are still intact on the daily. So last little higher low is 38.96. But my style of trading, if we see a bull move tomorrow, I'm trying to put on extended hours. So I will look to potentially top fish 40.01 and make a bear entry, hoping that we roll over and start to see some daily weakness. And I would do so through FAZ, which is the leveraged ETF. So FAZ is trying to confirm a trend change and trying to get a daily bounce going. So after today's action, I'm keeping an eye out bearish for XLF when this consolidation takes place. XLV, confirm the daily bull flag as well. We got tons of space for a daily high or low. We're much closer to the all-time high on XLV. So at this moment, out of QQQ, XLV, and XLF, XLF is showing me the most weakness in the short term comparatively. IWM, bull flag confirmed. So the broader market continued extremely strong the last 4 days. IWM did not. It traded sideways. Look at what all the growth names did. ARKK, bull flag into continuation. PLTR, bull flag into continuation. There's a ton of them, but they all did the same thing. Sideways trading, the rest of the market ran up. We had relative weakness for days, and now we're seeing the move up. Rotation. Confidence is contagious. The major names bounced first. Tesla, Amazon. Confidence returned to the big players first, and then the confidence seeps out into the laggards, to the weaker names, to the higher risk, higher reward names. Then they follow the leaders on the move. So that's what we're seeing in growth today. The question is, how long can bulls in growth keep the hourly uptrend to keep this daily catch-up move going? IWM is now putting anybody short from the last 2 months underwater, and the next major resistance level is up at 218.95. But it was a very big, impressive day for IWM. And just watching to see how long do bulls keep that move going, because most growth names will still have a lot of work to do on the weekly. Look at ARKK and where we came from. We have to confirm a weekly trend change if this reversal is going to follow through. And the same goes for most of these names. PLTR, great bounce, but you got a ton of work to do considering where we are coming from. So growth names have a different, bigger picture. You know, we're not talking all-time highs for any of these growth names anytime soon. PLTR needs 200%. Apple needs 3%. Tesla needs 11%. 200% is a lot different. ARKK needs over 100%. So it's a different longer term outlook, but it is the sector is playing laggard catch-up, at least for 1 day. We'll see if that sticks again tomorrow. Biotech sector did the same thing. Daily bull flag confirming. Still a lot of resistance to work through. 99.16 is the key level here, but a nice laggard. And again, that's another thing to learn from how this plays out. This is how bounces play out. I've done this in the crypto space, this exact same style, where Bitcoin leads the way and then the profits and the confidence go to the higher risk, higher reward altcoins, often multiple cycles over the last 5 years. So learn from this, because if you're not comfortable chasing QQQ at this point, as you should not be, these sectors were consolidating and forming bull flags. And so there were ways to establish trade game plans based around the names that were not overbought and were consolidating and were establishing support levels. So IWM, we noted yesterday, okay, we played defense. Are we about to go on offense? And the answer obviously now is yes. But there was a playoff support at 202.73. Bottom fishing bull is in. TLRY, inside bar bull break, traded TLRY a bit today, but it did double top. Canadian MJ, still a bunch of volatility here. We double top to the penny with the after hours high. So that's a very key resistance level to be watching. Keeping an eye out for if that level breaks, because then it's back into price discovery mode. If you can get back over 871, and we would look for the bulls to turn on the jets again from there. AMC and GME possibly topping out. Certainly looks like a volume climax candle may be forming here. SDC, keep an eye on this cup and handle like pattern. Resistance, consolidation, double top, bull flag, and here we are knocking on the door of resistances. So there's just a couple of volatile names to be keeping an eye on. I did trade CCJ today. Played the oversold bounce this morning. I said 2-minute stair-step dump. I am going to enter when the 2-minute stair-step breaks bull. So I did. I sold half. I think I got a good fill. I did jump the gun. I bought a little early, right before the 2-minute pattern broke, but fill at 26.38, out half 26, low 26.80s, risk free. And so now I have a small swing position, giving the bulls a chance for that to be our daily high or low. As far as the metals are concerned, they dumped down. We had a news reaction to the potential of, ceasefire, Ukraine, yada, yada. And we saw commodities dump on the morning on that headline. And I did not stop out of my GLD and SLV positions because I'm not going to stop out when the hourly RSI is in the teens. And because there are smaller swing size positions, I have that wiggle room. These are my least important positions that I have out of anything. And so now my stop goes under these lows because this is either our headline emotional reaction low and we're about to change the 4-hour trend and get a daily bounce going, or we're going to drop back down and break this level, and that will be a huge red flag for the bigger picture if that were to happen. But at this point, I consider this a 2-day bear flag confirming with 0 follow through. So I do still have my GLD and SLV positions, and if this low breaks from today, I'm done. I'm going to exit those positions because at that point, we will be setting up for a prolonged multiple month equilibrium on the weekly time frame. Oil continues to form this daily equilibrium, the most likely scenario. If you ask me what is the one pattern that I should learn in stocks? Equilibriums. They happen on every time frame. They happen after significant volatility. You can trade within the equilibrium while it's forming, or you can wait for the break. I can't stress enough how significant establishing the most likely scenario is, and then establishing a trade game plan based around that. If you know what direction you're looking, it makes zooming in and finding the details so much easier. I know the QQQ is looking for an hourly high or low on any morning sell-off today. So I know not to be an aggressive bear. And I know to look to exit some of my bearish position. We knew that oil daily lower high was the most likely scenario. So I can just keep an eye out and scout bearish. We then had a head and shoulders pattern shape up that confirmed. I know that I'm looking for a daily high or low on oil. Now it's attempting an inverse head and shoulders trend change. Equilibriums happen everywhere on all time frames often. QQQ and SPY today on the 30-minute, GMC, GME, and AMC yesterday on the 15-minute time frame formed equilibriums. Establish the most likely scenario, which you can only do through experience and looking at thousands of charts and watching it play out time and time and time again. I'm done talking. Do good things. Check out the free ebook. We'll see you soon.